In this video I'll show you what order block to enter from, which order blocks usually hold, which usually fail, when it's safer to wait for a confirmation break of structure, and where to put your entry, stop loss and take profit. And at the end of the video I'll show you my personal rule that makes you pick the order block on the correct time frame every single time, so your order block isn't too big but isn't too small either. When it comes down to entering with a direct limit order on an order block, you first want to be in a clear trend. Just like here, before the order block you're trying to enter on, you need to have a strong bullish move before and after. Then you are in a trend. Then the order block needs to have broken structure with a strong move in essentially a straight line, really without any pullbacks, with high candle closes. Now this part is very important. You need to have high candle closes, otherwise it could have just been a liquidation. Like you see over here, it was just a wick. It did break, but it was just a wick, no actual candle closes, and as you see, it took out the low. Now once you have identified this structure, then you zoom out as far as possible, so you can actually see the straight line up. This is a part where most people go in wrong. They try to zoom in here on something like the 15-minute chart, and they try to identify like the last imbalanced zone over here, or a zone that broke structure. You know, right now it might not be that obvious that this time frame is too small, too low, because when are you actually too zoomed in? Is that a 50-minute, the 30-minute, the 1 hour? You know, and when I give you an extreme example, like entering on something like the 2-minute, you can see how ridiculously small the zone can get. And maybe now you're saying, well, that doesn't make any sense to enter here. So then you need to ask yourself, am I zooming in too much? And how do I know that, right? Well, I actually came up with a rule myself that takes away any confusion. It's a very simple and systematic rule that you can follow every single time without any nuances. If you want to know what it is, I will stick around till the end. So a good rule of thumb would be to zoom out as far as possible, like the 4-hour chart. So all unnecessary details over here disappear. On the lower time frames, all the details are just distracting you, because you're going to lose the bigger picture, which is that you're just working with this high, this low, and this high, and everything in between. Doesn't matter. Usually people try to spot an order block that broke structure, right? Like I said, on the 15-minute. Maybe you would try to enter on this order block, because it was the last order block that broke structure. And if we go ahead and play it on the 4-hour, you know, that order block completely disappears. And if we see how this trade played out, it wicked right through it. Like, it completely ignored this zone, right? Now, a zone like this would actually be valid if it was visible on the 4-hour chart. You could trade the zone that broke structure with the stop loss below that zone, and I'm not too specialized in that, so I'm not really going over that. I do actually trade the zone that broke structure, but I enter always with a confirmation break of structure. So that would be this pattern, if you are familiar with that. So we enter this zone, then we break structure over there, and then you would enter on an order block on the smaller time frame, like that. That is possible, and I do trade this myself. My only advice for if you are going to trade those zones would be, again, to zoom out as far as possible so all the details disappear. And if you follow these 3 things, zoom out as far as possible, have high candle closes, and have one strong move breaking structure without any pullbacks visible on a zoomed out chart, your win rate will skyrocket for the trend continuation trade. And if you think, well, now my stop loss has become unreasonably big by zooming out that much, then I would say, well, you actually chose to trade that time frame you're trading on, and apparently you didn't know, but that is the time frame you are now trading on. If you would like tighter entries, then go ahead and trade the lower time frames, as simple as that, like the 5-minute chart, which is what I actually do, or enter with confirmation break of structures. I will actually go over that after this part. And for the people that are familiar with ICT, I must say I am not too knowledgeable about that, but from my understanding they would actually enter even higher. They would probably see this on the 12-hour chart, and they would see this move and this fair value gap, and they would enter like this. If I'm correct, I am not 100% sure, but I thought ICT works something like this. So stop below low, entry on this fair value gap, targeting something like a 2R. So when should you or could you actually wait for a confirmation break of structure? Pretty much if one of these three rules are not valid. So if the break of structure didn't happen very strong, if it didn't have high candle closes. But one thing very powerful about the confirmation break of structure is that you can pretty much enter on every zone, every order block, supply or demand area, as long as you are following the trend. And I actually made a video about that. You can check it out right here. The only time a zone or order block is not valid is when the confirmation order block is in an imbalanced area, or if you are not following the trend. And you will find this scenario a lot of times. And most of those are not going to work because you again need to follow some rules. I will probably make a video specifically about confirmation break of structures in the future. So if you want to see that, you could subscribe if you want, so you don't miss that video. But if you are again following those three rules with a confirmation break of structure as well, you will do very well. So then, what is a good ratio between the higher time frame and a confirmation time frame? I simply follow this. If the trend is at the 4-hour time frame, I would enter on the 30 minutes. If the trend is on the 30 minute, I would enter on the 5 minute. Now actually, if you are trading on the 5 minute and you are on a 1-hour trend, that's also fine if the 1 hour is an imbalanced order block. So right around 6 to 8 times zoomed in for a confirmation would be a relatively good rule to follow. So let's actually go over some examples. This is a nice one over here. As you can see, you could have entered on this order block right here. Why didn't this work? Well, you can see over here, we did break structure very nicely with a strong move, no pullbacks. Every rule applies, right? But this is actually not your break of structure. It's this one. And if you're looking at it from this perspective, we actually broke structure very weak because we had a lot of pullbacks in between. So not only is this not your zone, but right around here. And this is not your break structure, but it is right here. Then you can see we didn't break structure in one move, but we had a lot of pullbacks in between, indicating a weak break of structure, which is why this was not a very good entry. Now, for example, over here, we did break structure very violently with a lot of force, high candle closes. You could have very nicely entered on this area right here for a continuation. So what do I mean with you can enter on every zone with a confirmation break of structure? Well, this is what I mean. We are breaking structure over here, so you could enter right around this area. We are in an uptrend, as you can see, we are going up, and we are reacting on this area. So this is not actually an imbalanced order block, but it is a supply and demand area, because there were a lot of buyers and sellers in between that were also left behind. So orders are still resting here. So in what case would this not be valid? If we did something like this, then you would have a dead area. Then this would not be valid. But because there were a lot of buyers and sellers in this area, this zone is valid to enter on with a confirmation entry. So let's see what actually happened. And this is actually a trade that exactly follows my rules. So I would take this trade live. Let's see. And there you go. You nicely run up. So then what is my golden rule for being on the right time frame every single time? With a very systematic approach. It is very simple. Zoom out until the pullback consists of at least 2 consecutive candles. So if we go back to this example, right? If we zoom out until this pullback consists of at least 2 consecutive candles, then we can actually go to the 12-hour chart and still not be in a too big of a time frame. You would still not be zoomed out too much. And I dare you to try this and look over your past trades and see how far did you actually try to zoom in. Because chances are you are trying to zoom in way too much. Like, let's say, the 30-minute, right? Maybe you would try to enter on this and you would be left behind. Now, with confirmation entries, I actually oftentimes I enter very tight. And I have some very specific rules for when I take a tighter entry. And I'm not going to go over it in this video. I will probably make a separate video about that. So if you would like to see that, drop a like so I can see that you want to see more of my approaches and my systems. And for now, thank you for watching. See you in the next one. Bye.